My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. You know, one of the most important people on your real estate power team is a good legal counsel. And if you can find somebody who is not only a lawyer, but really understands real estate from the inside out, ideally is an investor themselves, then you have struck pay dirt. And that's exactly what we've done here today with today's guest, zooming in from beautiful Toronto, Ontario. Antonio DiMinno is not only a real estate entrepreneur, he is also a lawyer who focuses in on real estate. So Antonio, welcome to the call. Great to have you here.
Great to be here, Dave.
All right, my friend. So, hey, tell us a little bit about the Antonio DiMinno story. How did you get into law? Heaven forbid we got another lawyer hanging around. I tell you what,
yeah.
But everybody gives lawyers a hard time. I'm just joking with you, of course. So how'd you get into law, and then how did you get into real estate, or did it work the other way around? Did you start in real estate, then get into law? Tell us a little bit about that. I'm always curious.
Yeah, for sure. So I actually sort of started in real estate. I was, I remember reading my first book in literally my last exam of undergrad, and I did history and English, so not a very practical undergrad.
Hey, I had one of those BAs, which I call a basically asinine degree. Mine was psychology, so I relate, man. I hear you. English and history, not so bad.
Yeah, and like after my last exam, I remember picking up the book that everybody probably knows,
the purple one.
Yeah, the purple book,
yeah.
And that completely changed my view of life, my view of work, my view of money. And that, I was hell-bent on going to law school at the time. I, always wanted to be a lawyer, but I wanted to be one of those lawyers you see in court, right? Like on To Kill a Mockingbird and all these shows, right? But I quickly learned that I didn't want to be a criminal lawyer. I didn't want to do that. I had a deep interest in real estate. And I said, well, I'm going to law school. How can I possibly marry those interests of real estate investing? At the time, I was just kind of starting to get into it, and law. And as, the courses went by in law school, I took real estate courses, corporate law, all that sort of stuff, real estate finance. And it just sort of like came together. I didn't really like any of my other courses, but I did love the real estate.
Nice.
And yeah, so after, I graduated law school here in Toronto, and I worked for a firm for about a year to get we call it articling. It's like an apprenticeship to get your letters. And basically right after working for someone for a year, I just went out on my own. Nice. Started my own law firm with a business partner who also went to law school with, and he worked at one of those big fancy law firms downtown. I worked in a boutique firm with, a very knowledgeable lawyer who was a pretty wise person, and he did all this sort of development work. And so I got a good experience there. And, since then, I've been really focusing on helping not only people buying real estate, like I'll help the occasional, mom or pop sort of situation where they're buying real estate to live in it.
Yeah, their own personal residence type
right,
thing.
Yeah. Exactly. So of course I'll help people like that. But my main focus is real estate investors. Nice. And that's sort of how I brand myself. And a lot of real estate lawyers, when you start spitting the lingo at them, wholesaling, they have no idea what the hell you're talking about. And so I kind of saw that right away. And as I was going through investments, doing, short-term rental, I did my very first investment was a house hack here in Toronto, which,
your own personal investment, or your client was a house hack?
No, my personal investment was a house hack in Toronto, believe it or not. Yeah. People do still invest in Toronto these days, but it wasn't crazy as it is now. So the numbers actually made sense back then.
Mhm.
And yeah, that was my first investment. Did, Airbnb, short-term, mid-term rentals, got into a bit of private lending, and some buy and hold. Eventually started working with, as in a legal capacity, helping out a team of developers that do developments across Canada and the United States. So got a good understanding of that sort of world, and basically kept narrowing in on helping investors. And it ranged from anyone who was, from one end, which is, people just buying a property, their first investment, maybe they want to rent a basement, to, wholesaling, flipping, and, to the big sandbox
Syndications and
syndications and joint ventures, GPLPs, that sort of stuff.
oh, that
Um,
is great, Antonio. Yeah, so you're you've definitely found your lane. You get to be surrounded by real estate all day long and make a good buck at it, and at the same time see what other people are doing and see what you want to be focusing on. So, yeah, I got a bunch of questions, but the first question I got for you is, um, what you personally, now that you've seen real estates from so many different angles,
yeah.
through education, through your own personal experience, but just as importantly, through everything that you've done with your clients, what's your personal investing focus these days? Where are you headed as a real estate investor yourself?
Yeah, so I mean, long term, I'd like to do multifamily
Mm.
property, but at this point now, the way the market is and what I'm seeing in the legal world is, it's a little, not that I'm worried, but it's kind of cause for concern. And I think a lot of, certainly my clients and a lot of investors I know, are kind of just sitting on their money and kind of, let's just wait and see what happens. I mean, as you probably
See
know,
see what Bob Ford decides to do.
exactly. And, see what happens, what's going on with the central bank. And, flipping obviously has been much more difficult these days with higher interest rates and higher costs of like lumber and all that sort of stuff. So it's, yeah, I mean, I'm personally doing private lending, but in a high inflation environment, we all know private lenders tend to lose, right? Because you're getting private lending, the way it works is you get a certain amount of money every year normally. And if that money is losing value over time rapidly, well, you're actually getting less of a return than you think you're getting.
Mhm.
So but I think it's a great time to be in hard assets, especially real estate, but not only real estate. I've personally invested quite a bit in gold and silver. I don't see it as an investment per se. I see it more as a hedge against inflation, but I think I still hold fast to the idea that real estate is just a superior investment in every way. And I think especially during these times when we have all this uncertainty and inflation, it's going to come out the other end of this in good
Yeah.
shape. So,
Perfect. Well, hey, now the other questions I have for you are, now that you've been in the legal side of the game for some time, I'm sure you've seen a lot of people do a lot of
yeah,
stuff right, and you've seen a lot of people do a lot of stuff wrong.
yeah.
What are some of the biggest mistakes you're seeing your clients or other real estate investors making that just make you go, geez?
Well, Dave, I could, if you want to, it depends how much time you have, because that could
Well,
probably
let's focus on the
be it,
biggest ones.
but
Let's
yeah,
focus on, the mom and pop real estate investor,
for
maybe not the
sure,
big time syndicator, but the mom and pop real estate investor.
for
What are
sure.
some of the biggest mistakes you see them making that they can avoid?
One of them is the simplest mistake you can think of, which is not having anything on paper.
Mm.
It's the biggest issue I see among newbies who are just getting into it. You know, he's good for it. We're good for it. Don't worry, we don't need anything on paper. I see this a lot in family joint ventures, and it's not that people have bad motives. It's that we're human beings. People forget about things that we put in the contract. Circumstances change. You might mis miscommunicate something or interpret something, right? uh, the wrong way. So that's one of the big things. I always say when I have family joint ventures, it's a double-edged sword because on the one hand, it's a great way to get started if you're really new because, you got an uncle or a mom or, brother or whatever. And, there's obviously a higher level of trust between family. So it could be a good way to start getting your capital going. But on the other hand, with family, it's sort of the lines obviously blur between business and family.
Yeah.
Oh, okay, well, I'll give you the money next month. Well, what about when I help mom do this? Like, right, all that stuff starts getting in there. And so I tell, when people say, well, I don't want to have an agreement because how can I go to my dad and say, sign this agreement, right? It's like I don't trust him or her or whatever, right? And I say, well, here's a good tip. Tell them it's not that I don't trust you, it's that I don't trust myself to remember everything that we talked about. So this is why I want it in writing. And you don't have to call it a joint venture contract. You can call it a family joint venture
An
agreement.
agreement.
Make it a few pages at least, and at least you have something, right?
Mhm.
And so that kind of ties into the next red flag I see, which is very short contracts. And say you got a couple buddies, you're going in on a deal, you're going to put in this much, they're going to put in this much. Uh, this is the title to this is the name of the property, you have that down, and we're going to take the profits, sell the property, and do it all over again. That's in the agreement. It's about
Yeah.
a page or two, right?
Mhm.
Now sounds not bad, but it's not good because there's not it's better than nothing at all, but
Yeah.
there's nothing there about exit rights. There's nothing there about death, divorce, disability, what happens if there's capital calls, right? Joint ventures can be very, very complex um endeavors, right?
Yeah.
And so you just so what I always say, of course, I'm going to say this, but contact a lawyer, preferably an investor-focused lawyer who, they're not going to kill the deal. They're going to look at it like an investor and say, but look at it also with a lawyer hat on and say, okay, I know your budget is $500. This is what I'll do for $500. It'll cover most of your bases. You're not going to get these, but if you're okay with that, here you go.
Mhm.
The last thing you want to do is, when a lot of investors are cash strapped, right? So especially the newbies. So you don't want to go to one of these big firms and they're gonna, charge you down the nose, charge you 15 grand for a contract that, you have an associate pump out in an articling student pump out in an hour. So, it's really important to get one of those investment focused lawyers. Um,
So
another,
that brought up some points for me though. So your first point there about the family, I see that all the time, Antonio, because as you know, we help people raise private capital, do joint ventures, that sort of thing. And quite frankly, friends and family is
for
where
sure.
most newbies need to start.
Yeah.
But I love what you said there. I really, and I want to hit that home. If you're concerned about Uncle Fred getting his nose out of joint, doing a formal contract with you, that's right. Just change the title a little bit and then explain it to Uncle Fred that this is for you so that you don't forget all the stuff that you guys agreed on, more
Yeah.
than it is for Uncle Fred. Not that you're not going to trust him. Here's what I always tell people. And I want your opinion on this, Antonio. I
Sure.
say, when you are working with a close friend or a family member, treat it as if you were working with a complete stranger. Treat it as if you were working with an accredited investor. So if you were working, even if you're just kind of a mom and pop getting started doing your first joint venture, doesn't matter. Because here's what you're going to do. If you were working with an accredited investor, that person would insist on number one, a good legal contract. Number
Yeah.
two, they would insist on getting their own independent legal advice to look over that contract. Number three, they would be expecting regular reporting and
Mhm.
regular meetings with the active partner. So do that with Uncle Fred too. Do all of those things with Uncle Fred, get things rolling, then have on the side, have that spit and a handshake deal with Uncle Fred where you say, hey, Uncle Fred, if you ever have any questions about this deal or whatever, I'm just a text away, a phone call away. We're going to have our regular quarterly meetings. We're going to take care of it. It's all going to be good. But let's make this side deal. When we get together with the family, let's keep that family time. And when it's business, let's keep that separate from the Thanksgivings and Christmases and all that kind of stuff so that we don't mix things up too much. Does that sound fair, Uncle Fred? So that way you're setting yourself up for success with Uncle Fred. Plus you're getting in those good habits that you're going to need to have when you start bringing on other investors, other joint venture partners, start syndicating, that sort of thing. What are your thoughts around that, Antonio?
Yeah, I think that's excellent advice. You want to get into the habit of knowing what a good document looks like, knowing what the right thing to do is, knowing, you're doing that communication. You're going to have that clause in the joint venture agreement that details how and when you're going to get regular communication. You're going to have a complete pro forma. You're not going to have a dog's breakfast, right? You're going to do the ILA, because here's the thing, it's not just important from a legal point of view. And this is where,
For
getting
people that didn't catch that, ILA is independent
ILA.
legal advice. Yep.
That's right. So, you have your GP who's arranging for everything, and maybe he or she has 10 limited partners, or let's not use the legal lingo and say passive investors, and you got your active investor. And you should send each of those passive investors and say, look, I've got my own lawyer. We've discussed this. I want you to go to your lawyer and discuss this with your lawyer. And number one, that creates trust. So we're talking the business side. It's important from the legal side. I'll get to that in a minute. But from the business side, it creates trust with that party, right? Because you're basically sending them to their own lawyer, make the decision on your own and see if it's right for you, right? So that creates trust. And the other thing from a legal point of view is, if you don't send them to legal advice, and they enter the contract or the joint venture, whatever, and things don't go as they expected them to go, they can make the
Which
argument,
happens sometimes.
for sure.
Yeah.
They can make the argument that they didn't know what they were signing, they didn't have an independent legal advice, and they can unwind the agreement. They can get their money back. They can sue you. So you want to avoid that, right? And for them, independent legal advice, the $300 to $500, and they get that. They're good on their end. You're protected as the GP, and it's just best for everyone.
Yeah, and if they really don't want to get independent legal advice, at
That's
least get them to sign off on a document
for
saying
sure.
that you really recommended they get their own independent
Exactly.
advice and they've chosen not to. That should
Yeah.
help cover your ass as well.
Yeah. For
Cool.
sure.
Hey, as we're wrapping up here, Antonio, one of my pet peeves, and I don't know if this isn't so much a legal thing, it's more of a securities type thing, but I'd love your thoughts on this. I see so many people who should know better posting, looking for
Oh, wow. Yeah.
investors on social media. I mean, I just saw a guy who's a pretty big name. Like he's making a splash. He's getting a lot of attention. He's doing all sorts of different stuff. And I just saw him post on Facebook, hey, I'm looking for 5 investors who want to double their money and blah, blah, blah. And it's like, oh my God, don't
Yep.
do that. What are your thoughts about that? What's
Yeah, so this is the area what lawyers call securities law, as you probably know and you've dealt with before. And basically, it's a complex area, but I'm going to just simplify in a sentence. Anytime you're selling an investment, which means that I'm buying something from you with the expectation of a profit, and that expectation of a profit is dependent on your efforts or a third-party effort, that is potentially a security. And when you're issuing securities, you have to follow certain rules, and they're very strict. They're one of the only rules in the private sphere that can land you in jail. So you really want to be careful when you're trying to raise money. And this is why you need a multifaceted lawyer. You don't just want to know how to structure the deal on the corporate end, how to buy the property on the real estate end, and how to, do other things. You want to know how to raise money and to do it legally. And so generally when people are doing this, you want to contact the securities lawyer, but generally this is going to fall on what's called a private issuer exemption. And the private issuer exemption basically lists a number of ways that you can raise money without doing what a public company needs to do, which is issue a prospectus and spend hundreds of thousands of dollars. And it allows for certain exceptions, but it's a complex framework, and you got to follow the rules. So when your marketing materials are doing, like you said, they're on Facebook, those people who are posting stuff on Facebook, they're issuing securities, and I'm guessing the OSC, the Ontario Securities Commission, isn't watching that Facebook group, so they're getting lucky, but they can get in a lot of trouble. Especially, they're going to get in trouble not necessarily when they're trying to market the stuff, because the OSC isn't looking at everyone at every time, but they're going to get in trouble if things don't go well with an investor and they didn't follow the rules and they didn't do the right filing requirements. They didn't have the proper disclosure in their marketing materials. Yeah. And best case scenario is that the client can ask for all their money back, and they have the right to do that. Even if you lose their money, they can say, well, you didn't give me the proper disclosures. I want the $100,000 that I got back, and they can get it back. You can be fined a lot of money. You can be banned from doing any sort of capital raising ever again, or at least for a long time. And worst case scenario, you can end up in jail. So, I always tell clients, our team deals with raising money. We have people on our team, spend the time, spend the hour. It might, this is an investment in your career, right? And if you're spending an hour, spend $300 or whatever it is to understand, what can I do? What can I do? When do I at least need to consult a lawyer? When am I okay? Just knowing that will put you in really good stead and will separate you from the pack from a lot of these guys that are, frankly, sooner or later, they're going to get in big trouble. And it's really only a matter of time, because not all your deals are going to go right.
And we've seen a few high profile cases out west in Saskatchewan over the last couple of years, just things imploded. No, that's fantastic advice, Antonio. So if people want to connect with you and find out more, what can they do?
Yeah, I'm on Facebook at Antonio DiMinno, and generally all social media. But if you want to connect with my law firm, you can reach me at www.drlawyers, like doctor, drlawyers.ca.
Perfect. Thanks very much for being on the show. It's been great, and I appreciate your insights.
Thanks, Dave. It's been a pleasure.
Take care, everybody. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.